Imagine your savings are a leaky bucket. Every day, a little bit of your hard work silently drips away. That's essentially what happens with fiat money. US dollars, euros, other currencies due to inflation. But what if there was a better way? What if you could store your money in a bucket that doesn't leak? A way where your money is solid, so you can finally build for the future without worry. That is the promise of a Bitcoin standard. But what does living on a Bitcoin standard really mean? It's actually a simple idea. You use your Bitcoin as your main store of value, and you use your local money, like the dollar, for everyday spending. The rule is to save the good money and spend the bad money. It's all about changing your financial plan to save in something that is designed to hold its value, while you keep using the money that goes down in value for your daily needs. Hi, I'm Dr. Hunter Allbright, Chief Revenue Officer at SALT, a former banking executive and professor at the University of Colorado Boulder. Now, for nearly 30 years, I've worked at the intersection of credit, analytics, and emerging technology, from leading global portfolios in traditional finance to building Bitcoin-backed lending infrastructure today. And this channel is about helping you think clearly in a noisy world, to understand Bitcoin through structure, risk, incentives, and long-term value. Today, we're going to look at what it really means to live this way. This isn't about new money, it's a new way of thinking that could change your life. Before we define a Bitcoin standard, we need to understand what we're comparing it to. Under a fiat system, money is elastic. Supply expands over time. Inflation is structural, not accidental. And saving in cash is generally a losing long-term strategy. So most people adapt. They don't save in money, they invest in assets. They buy real estate, they buy equities, they seek yield through other investments. Not necessarily because they want to, but because they have to. The predominant system incentivizes risk-taking and punishes passive saving. A Bitcoin standard flips that equation. Bitcoin is a fixed supply. It's programmatically scarce. It's globally transferable, and it's politically neutral. When somebody adopts a Bitcoin standard, they utilize Bitcoin as a primary store of value, not as a trade, not as a short-term speculation, but as monetary savings. This is the first major shift. You stop thinking in terms of how many dollars is my Bitcoin worth, and you start thinking in terms of how much of my time and energy have I converted into a scarce monetary asset. Here's where it gets interesting. Living on a Bitcoin standard does not mean spending Bitcoin constantly. In fact, for many people, it means the opposite. It means saving in Bitcoin, measuring your net worth in Bitcoin, making long-term decisions in Bitcoin terms, and avoiding unnecessary liquidation. You begin to ask different questions. Is this purchase worth parting with my scarce Bitcoin? Is this investment productive enough to justify selling saved Bitcoin? And am I consuming or am I allocating capital? It changes your behavior. It introduces discipline to your financial planning. One of the most profound changes is psychological. Bitcoin reduces short-term bias and rewards patience. When your savings appreciate structurally over longer periods of time, you think longer term, you spend more intentionally, you evaluate trade-offs more carefully, and you prioritize durability over consumption. Under inflationary systems, the pressure is to deploy capital quickly. Under a Bitcoin standard, the pressure is to preserve and allocate capital wisely. That difference is subtle, but very powerful. Now, let's be clear. Living on a Bitcoin standard doesn't eliminate real-world needs. We all still have taxes, rent or a mortgage, expenses, investments, and unfortunately emergencies. The practical challenge becomes, how does anyone access liquidity without dismantling your savings base? This is where financial tools, planning, and discipline come into play. But philosophically, the goal remains the same. Preserve the monetary foundation, use capital strategically, avoid unnecessary dilution of your long-term position. Living on a Bitcoin standard doesn't mean ignoring other assets. It doesn't mean refusing diversification. It does mean deciding what your base asset is. Historically, that was gold. Today, for many people, it's Bitcoin. Everything else, real estate, equities, businesses, may exist on top of that base layer, but the savings foundation remains scarce, durable, and fixed. Now, a Bitcoin standard isn't for everyone. It requires conviction, volatility, volatility tolerance, long-term thinking, and emotional discipline. But for individuals who deeply understand monetary debasement and scarcity, it offers coherence. It aligns incentives. It simplifies long-term decision-making. Living on a Bitcoin standard is less about ideology and more about structure. It's about choosing a monetary foundation that cannot be inflated away. It's about lowering time preference. It's about treating savings as sacred. And it's about building a life where your money works with you, not against you. The question isn't whether Bitcoin will replace fiat tomorrow. The real question is, what monetary standard are you building your life on today? If this idea clicks with you and you want to build a real foundation of financial power, then subscribe to this channel. We're just getting started.